Money FM 89.3. Best of breakfast. Companies to watch.
All right, lots to talk about today. And Dan Ko, good morning.
Good morning, Ryan Huang. How's Wednesday looking?
Pretty busy with all the tariff talk. I wonder what else is going to be happening this week.
Oh my goodness, that's top of mind for most investors out there. But welcome to Companies to Watch. That's a segment where we spotlight and stock you up with ideas of listed companies that will call for attention. So we're looking at market trends and risks, hidden gems or warning signs to steer clear of as well. I want you to be part of the conversation. So 8855-0893 and tell us whether you think it's going to be a hot or not. Ryan, you ready?
Yeah, I think this company is right in the middle of things when it comes to tariffs, at least the person behind it.
Exactly, because volatility has surged with $10 trillion wiped off global equities just after the US unveiled sweeping tariffs last week. And some analysts might say that this could be a buying opportunity in the long run, but others have flagged that the risk of a longer-lasting cyclical bear market is just around the corner. So if there's one thing for sure about President Trump's twisted international trade tariffs, as some might call it, it's that US consumers will start to pay more in the months ahead for not just a new phone, Ryan, but a new car, a truck, or an SUV. You don't have a car, do you, Ryan?
No, I don't.
Would this affect you as much? Not really, huh?
Probably not, but I can imagine a lot of folks down the road, of course,
Yes.
will have to cough up a bit more because when you're making a car, it comes from many different places.
Exactly.
And it all comes together. Someone has to pay the price.
And for one company, he might be lucky because it's known to source the majority of their components domestically. And some might say it stands to gain. Or maybe not. I'm talking about Trump's pile and Dodge advisor Elon Musk, who stands to come out the most ahead of the tariff wars, as Tesla leads the industry with an average 81% domestic content, placing 5 of its models atop the current Made in America index. So, as you can tell, I think it's pretty much at this point, I wouldn't say free of the tariffs, but in a sense, independent or just not as badly affected as other international
brands.
brands.
Not as vulnerable or sensitive because they've got factories in the US, they've got factories in other places as well. So the big question is, of course, what it might mean if they might be shipping stuff to China.
Exactly.
Are they going to see more tariffs, even though in the US they are not in that sense?
Exactly. But Ryan, investors don't think that Tesla is set to do well. In fact, Tesla's shares have plunged 15% in the 2 days after Trump announced that he would apply at least 10% tariff on all countries' imports into the US, and some with even higher duties on 60 nations to counter trade imbalances. In fact, one of Wall Street's most bullish Tesla analysts had slashed his target price for the stock by 43%. Citing a brand crisis created by CEO Elon Musk and President Trump's trade policies. Now, we're talking about Daniel Ives, a Wedbush security analyst who rated the carmakers' share a buy for the last 4 years, and he quote-unquote said that Tesla has essentially become a political symbol globally.
Yeah.
Now, Ives reduced his Tesla share price target to $315 from $550, which had been the second highest among the 72 analysts tracked by Bloomberg. How are you reading this?
Yeah, he's got a point because I've seen some reports. Folks have been vandalizing Teslas in the US. So he has, like you pointed out, become quite a divisive figure. And on top of that, he is so busy. You have to ask, where does he get the time to do politics and run a business at the same time?
Yeah, I think he runs like almost 3 to 5 more companies on top of Tesla. So Ives' biggest concern is the potential for Tesla to get caught in the backlash against the US president's tariff policies in China, where Tesla generated more than a fifth of its revenue just last year. And it doesn't help that Xi Jinping has also imposed a 34% tariff on all imports from the US starting on April 10th. That's tomorrow. So reading the news, I mean, you've seen how China has vowed to go all the way to the end with the US in terms of how they're going to play out on the tariff trade war. So that certainly doesn't help their case. And in a note to investors, analysts have said that this would further drive Chinese consumers to buy domestic brands like BYD, NIO, XPeng, and others as well. So that being said, Ives thinks that Tesla has just destroyed at least 10% of its future customer base globally, just based on self-created brand issues. And this could just be a conservative estimate, Ryan. That could go above 10%. On top of that, we've also got Commerce Secretary Howard Lutnick predicting that they'd never fall to levels lower than $235.86 just a few months ago, saying that it would be never this cheap again. In fact, Elon Musk have also told Tesla employees, they should hang on to their shares. But Ryan, guess what? The prices of Tesla has gotten cheaper. Just last night, it closed off the session at $221.86. That's down more than 40% year to date. And it's astonishing to see how the stock has performed since Trump's election victory, which many expected to be a boon for the company, given Musk's proximity to the then president-elect. And instead, like what you've said, Musk's involvement in political controversies, both in the US and abroad, has repelled some car buyers and spurred protests against the company. And on top of that, Tesla also reported first quarter vehicle deliveries that failed to meet drastically lowered expectations, leading to its fall to the lowest level since 2022. All in all, I think it paints a pretty dark cloud for Tesla, and I don't know if this might change anytime soon. What do you think?
Yeah, I think it'll paint it in context as well. It's not Tesla that's been going through a hard time. Many car makers have been going through hard times with the backdrop of the tariffs, supply chain issues, the competition as well. So not an easy ride for many of these car makers, especially Tesla, with all the other extra issues. So tough one to call.
Yeah, I mean, at least for Tesla, for me today, I think I'm going to go with a not. That's pretty much almost aligned to what the other consensus ratings are saying at 9th of April. TipRanks, Yahoo, and Barron's all giving it a whole rating. What about you, Ryan?
There's a bit of a wait and see going on. Also worth noting, Elon Musk is now at loggerheads with the trade advisor for Donald Trump, Peter Navarro. So both of them are just going at it with each other. So there are going to be some fireworks.
All right, Ryan, and that's all we have for Tesla. Now, stock in focus for today. Now, Ryan, do you know what was Tesla's first car?
The Model 3 or is it Model Y?
Try again.
Model 1?
It's called the Tesla Roadster.
Yes. I think that went to the moon.
Debuted in 2008, and exactly right, Ryan. It was created to show how an electric car could outperform a gas guzzler by being much faster for less money. And yes, it was the first car to be ever launched into space by Elon Musk, of course.
Of course.
So, what does Elon Musk and Tesla have in common?
Oh, they're both rich?
They both have a hard time staying in their lane. Okay, what do you call a stretched billionaire, Ryan?
Super rich.
Elongated. And that's all we have for Tesla.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.